Over the past couple of months, and all while I was transitioning into becoming a full-time business owner, I had this nightmare. I'm talking one of those nightmares that you continue having over and over, night after night. The dream would always start with a big news headline stating, "This is the end of the giant. Amazon under legal investigation." I would then go online to my account and see that all of my product listings, they were suspended, and I'd quickly learn that Amazon plans to remove all third-party sellers like us permanently. Now don't get me wrong, there's a very, very slim chance of this actually happening. However, being an Amazon seller, it's important to have an exit strategy or at least other incomes in the case our worst nightmare were to come true. That nightmare right there, that was my worst nightmare, and that is why I plan to invest my Amazon store profits into real estate. So you may be thinking, with the right product and marketing, selling products on Amazon is going to always provide a higher return, a higher rate of return on your investment than real estate ever could. Now that is true for the most part, especially if you have a good product line. However, there are reasons why you shouldn't always chase that highest return. First off, like any sound investment strategy, and as the old proverb goes, don't put all of your eggs into one basket. Diversification and protection is the main reason why I'm investing my Amazon profits into real estate. Now looking at my current investments, I have about 41% being invested into my Amazon business currently. Then I have 28% currently in real estate for rental properties, and the remaining 31% in equities and bonds like stocks and bonds. Now this may seem like a balanced portfolio, but equities in my Amazon stores are extremely volatile investments. As we saw back in March of 2020, the S&P 500, it can plunge nearly 33% of its value in just a matter of weeks. By investing more in real estate right now, I'll be able to balance that portfolio a little bit better, a little bit more evenly. That way, I'm not just investing all of my profits back into my Amazon store. Now, my second reason why is that real estate has historically been a very low volatile investment. I have my Amazon store and I have a lot of money in equities, which tend to be a lot more volatile, especially in those times when the stock market is having a bad year or even a bad month, right? So during those bad times, real estate actually tends to perform much better than equities in the stock market. So my goal is to lower my volatility in my investment portfolio by doing this into real estate. To further prove this point, let's look back from 1960 until today. The average sales price of a house in the US has increased over $320,000 with only a few years of depreciation. Now you may be asking, what does it mean high volatility, low volatility investment? Simply put, a high volatility investment like equities in the stock market, that simply means that in a short period of time, that stock, that asset can quickly go up or could quickly go down, which is our fear, right? Now for a low volatility investment like real estate, it will appreciate over time and it will depreciate in some smaller frames of time. But simply put, you're not going to expect those huge swings. I'm not going to expect real estate to climb 30% in 1 year, but I'm also not going to expect it to decline 30% in 1 year. Lastly, just as any good business owner knows, and you might know it from your Amazon store, tax write-offs are your friend. With your Amazon business, you can write off expenses such as cost of goods sold, your marketing, office expenses, and so on in order to reduce your taxable income at the end of the year. Now listen closely because I'm going to tell you a secret. Real estate may be, in my opinion, the best tax write-off that there is. If you own a rental property and treat it as a business, you can write off your mortgage payment, mortgage insurance, homeowners insurance, flood insurance, repairs and maintenance, and biggest of all, depreciation. All of these expenses will support you come tax season, and it's going to reduce your tax liability to the government. Now, in most cases, you need 20% down if you're going to actually purchase a rental property solely for investment purposes. Now, what I'm going to teach you guys is that there's actually ways around that where you can get an investment property with only 3 or 3.5% down. Now, here's what you can do. Assuming that you have good credit and a stable income source, you can actually apply and get approved for a low down payment loan, which they typically range anywhere from 3 to 10% down. Now, you can't just go ahead and rent that property out. In order to get around this, you need to live in that property for at least 1 year, and then after that, you can go ahead and rent it out. If you've been following the channel for a couple months now, you know that I just recently moved into a new home, which I'm currently in. Glad to say that I'm done with moving right now. And my wife and I, we actually did the same thing down in Houston, Texas. We lived in a townhome for a couple years, and then now we just ended up renting it out this past July. Okay, so switching gears here, let's say that you hate the thought of this plan because you have to either move every year or you actually have to own a home. And those are things that you don't want to do. However, you still want to invest in real estate. What you can do is you can invest into real estate investment trusts, or REITs, or REIGs, which are real estate investment groups. With these investment funds, you can reap the similar investment returns and low volatility in real estate without actually having to own any real estate. So feel free, go ahead and check out this plan, see if it's something that you might be interested in to balance your portfolio. I do encourage you, especially as an Amazon seller, not to put all of your eggs in one basket, and do not put every profit that you gain from Amazon back into your store. The smart thing to do is put a large portion in your Amazon store, especially if you're in that growing stage, and then put some of the other money into low volatility investments like bonds or like real estate. Alright guys, thank you so much for watching. Let me know what you think about real estate as an Amazon seller. If this is something you're interested in, I would enjoy really talking about the rental property that I just rented out and some more stories along those lines.